The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks. The first chart that I posted into Tiger TV today was the Russell Index. As you can see, we've been using this pattern called the T6 pattern, which is that expanding triangle. Yesterday, we hit the low edge of that expanding triangle. But the second chart that I posted into Tiger TV today, I think, is the more important one, and that is the one that shows the New York Stock Exchange Index, which is the broadest measure of stocks that we have here in the U.S. It made a perfect 61% retracement off the October low yesterday, which was a slightly lower low than the day before. I will show a little bit later the three drive to a bottom pattern that we made on the S&P 500 before it rallied 50 points. It then went down 50 points to make a double bottom and is now in the process of rallying one more time. So all of this, I think, is pretty important. The date that we have coming in here yesterday and today, because if we go below those lows, folks, that's going to be really, really nasty from a technical standpoint. There's just no other way to look at it but that way. It's just very, very traumatic to think if the market can go below those levels. That's the real key to look at on those. So we'll watch that, very, very closely. Now, I wanted to mention a couple of things. First, I want to post in here that S&P chart because I think it really shows the three drive pattern that it was making, and then I'm going to do two of them. I'm going to show you the one right before the rally, and then I'll show you the one after the rally, which we all know what it looks like, but just for general purposes, we should look at it again just for the heck of it and see how it came about, if I can only find it. And guess what, boys and girls? As luck would have it, I can't find it, so I'm not going to worry about it too much. I wanted to mention, before we get into the stocks, I wanted to show you what was happening, because I know a lot of you folks don't follow foreign currency. I just wanted to show you what the Russian ruble has done over the past few days. It's been in a parabolic move, much like we had when silver was going to $49. This was a tremendous move, folks. It's about a 50% move in the ruble to the downside. That's pretty much of a collapse in the ruble as we're seeing it at that time. So we have to watch it, very, very closely. Just from a, you really can't trade it, but from a political standpoint, I think it's very important, because what they said today, and I don't believe anything that they tell us on the news, is CNB reported Russia had reported that they were selling their foreign exchange reserves. Well, isn't that interesting that they were so nice of us to tell us that they're selling their foreign exchange reserves? Boy, what a nice group of people. All I know is that when you have a country that raises their income in Russia to 17%, what that does, it brings people money into Russia to get that interest rate. Well, that's really a good deal, except the next day when you wake up, they've devalued the currency by 10 to 1. And instead of getting 17% interest on your money, you're now getting 1.7% because you have 1/10 of the money that you had. So you're still getting 17%, but it's on 1/10 of the money that you had, which figures out to 1.7%. Mexico has done this so many times, it's almost like a roulette wheel. And it's really, it happens. Venezuela, many of these emerging market countries do this all the time, so don't be lulled into that. It goes back into what I can't remember. Bernard Baruch once said, "Don't be concerned on the return on your money. Be concerned on the return of your money." That's the key, to really be watching. That's the way I'm, approaching it right now. Someone asked a question about the crude oil. We've had our best rally we've had since early December, when we rallied $6 a barrel. We've done pretty much the same thing today. Last night, we made a perfect 786 retracement in the crude oil down there at $54 a barrel. We immediately rallied $5 a barrel. is our, a little over $4 a barrel, which is our biggest that we've had. We need to get oil above $60 a barrel to tell us that this bottom is finally in. Long-term daily and weekly charts tell us that oil has still got a chance, to make it down to the $51 a barrel level. So keep that in mind. But the fact that we're having a little rally today might even be helpful to stocks too, because of the fact that we've got these things, jumping around, So that's one things that we want to be, keeping an eye on. All right. Now, someone asked a question about one of our favorite stocks and one of our favorite people, and it wasn't Charlie, but Priceline Charlie, but we'll bring this one up and we'll take a look at it because it's a very interesting chart here. And he was wanting to sell it. In fact, he did sell it around 11:30 when it was up at that retracement level, and we've had a pretty big break in this, so I'm sure there's going to be a happy Christmas down there in La Paz, Mexico, where he's vacationing. That gives us a price objective in this down to about 921. That's what it looks like. I have to agree with Basil about the overall bearishness of how some of these stocks actually look. I mean, they look very, very bad. That's all I can tell you. The only hope that I can see here is the fact that we made that beautiful 61% retracement in the stock market yesterday, in the overall stock market. I will post two things here that I think will help us why we're in this rally that we're having today. The first one is the picture of the VIX. We went up to the 61% retracement, exceeded it by just Bullwinkle, Rocky to Bullwinkle. Bullwinkle, are you there? I think we have a game here. Okay, glad to be back. Thank you for the wonderful world of technical problems. Someday maybe we'll get all these things fixed, but probably not in my lifetime. I've posted the chart of the NASDAQ. It also had a very bullish pattern as of yesterday. We had a situation where we had the price of the NASDAQ, like a perfect Gartley down there. We had a 382 retracement. We made the 50% retracement in the Dow. We made the 61% retracement in the New York Stock Exchange Index. So we're definitely in a bullish these last few days. And the question is the Federal Reserve going to come out with QE 6, 7, 8, 9, and 10, which they probably will. But overall, long term, some of these things look just absolutely incredibly bearish. There's no other way, to put a handle on this other than looking at it. And the fact that we've had pretty strong sell-off, since December 1st. All it's been is just down and is held pretty nicely. But like we mentioned before, this NASDAQ, the New York Stock Exchange chart posted into the room today, is the one that is really telling you what's happening, with some of these stocks. Now, one of the stocks that someone asked me to take a look at that Basil talked about was the stock of IBM, and I wanted to bring that one in here to let you take a look at it, because as you can see, IBM stayed right around the 160 level for well over 3 weeks and could not rally at all. And then when it broke, you can see that it just finally started to cascade to the downside. That sets up much lower prices in IBM, longer term. That's really what it looks like. Remember, folks, there's only 521 stocks that have been making this market go up. We've had these three divergences in the New York Stock Exchange Index, and that in itself is extremely bearish. And we'll see what the Fed does. I mean, they're going to do something probably to make the market bullish. I wouldn't know, but let's follow the trend. I mean, you could see the bottom coming in yesterday. That was not a hard one to see. So just remember that whatever this thing is going to do, it's probably going to reverse itself just like it did yesterday. Any market that can give you 50 points in 2 hours can take 50 points close to 200. We'll be back in just a minute after these words of wisdom.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rose, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direct 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Never mind. Okay, got it in my bird. Okay, back here. Okay, we're back, folks, and I wanted to talk a little bit about one of the foreign currencies cross rates that I follow very closely, and that is the Australian dollar. We just finished a trip down there last month, and we had a wonderful time in Sydney and Melbourne and then also in Auckland, New Zealand. We were only 100 feet away from the restaurant that had the problems with the terrorists this past week that lost a couple of lives, which was very sad. And We were very lucky to not be in that restaurant. We were in one just a few doors down, so anything can happen in this world. So we got to, take our lumps and see what's happened. Hopefully we won't have any of those problems anymore. But the Australian dollar is highly tied to commodity prices, especially mining stuff like gold and silver, copper, and things like that. It's also with oil, also important. It's making a huge pattern here going back over the past year. It's making this long-term ABCD pattern at the 1.618 expansion. What was so interesting today is that today's low that came in at 81.42 was the exact number to the exact tick that the Australian dollar hit. Now, I don't know if that's going to end to be what it's going to be, but that's what it in fact was. So you have to be able to understand that it can be really crazy during these times to see these markets drop as much as they did. I want to talk a little bit about cattle, because our good friend Rich Anderson, he told us a couple weeks ago about the potential for a short sale in cattle if they went below 169. They're now trading below 158, I believe. They've been limited down 2 days in a row, and we're going to have Rich on the show tomorrow for the commodity show. I've got a couple other long-term charts for commodities and cotton and sugar that we don't usually look at, but these have really interesting things from a really long-term perspective that could be telling us what's really happening in some of these softs. And softs are, coffee, cocoa, and sugar is what we're looking at when we're watching these. So we'll cover that tomorrow when we have Rich Anderson on. Okay, we're going to take a look now. We've had a request to take a look at the price of one of our favorite stocks, which is Apple. And it'll just take me a second to pull this up. And I would like to disagree with Basil on one thing, and that is that Cucumber building, I don't know what they call it in London, but I really like that building. I think that building is really cool. I've been inside of it, and it looks weird, but it's pretty good. Compared to some of the things in Shanghai, it's really not very eclectic, and I don't even know what that word means, but I use it a lot. However, it is a little weird, that's for sure, but I like it. It's very, when you see that, it's like seeing the Eiffel Tower in Paris. You know exactly where you are. Now, we're looking at Apple. We had that run from October 15th into December 1st, where the market went up 28 days in a row. That was basically an outlier event. We'd been saying that for quite some time, and I believe we went down to almost the exact 61% retracement 2 days ago at 106. You want to watch the quality of the rally here, because if we don't get back above 113 in Apple, I think you could see Apple trading easily at $75 or $80 a share relatively quickly once the rest of this market starts to move to the downside. That's the way it looks from the perspective of Apple on a longer term price chart that we're watching. It's got some very interesting things at these levels, because we've been down 10 or 11 days now, and we've only been down a very, very small amount compared to the rest of the market. So it's a much stronger than market stock, and that's what you want to keep in mind. That's what we have. That's what's happening. So that's neither here nor there, so we'll keep an eye on what's going on with that one. And the next question that we had was about Tesla Motors, and give me 1 second here, I will get this one ready and we'll look at it post-haste here. Hopefully I'll get this thing working here and we'll be able to see if this thing will get everything I need here. QR Tesla, here we go. There we go. Yeah, Tesla is having a little reversal today. We've had an outside day where we went down and we made it lower low than yesterday, and now we made a higher high than yesterday. That also has some bullish ramifications. And as you can see here, when I push the chart up, that you'll see this outside day very easy. Okay, we're going to take a break here. We got the stocks backing off just a tiny little bit, and right after this message, we'll be back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've got a caller from California. Brent, are you there?
I am, Larry. You sound much better today.
Yeah, I am slowly on the mend. It's been a little rough 2.5, 3 weeks, but I'm doing a whole lot better. Now, you had a question on a specific stock?
I did. I know you're not a big stock person, but I went ahead and took a shot on this one yesterday just because I've been following the pattern on stock is CLR.
CLR?
Yeah, CLR.
Okay, my connection's a little rough here, but we'll take a look at it and see if we can get this up here. take a look at it. And CLR, Charlie Larry Randolph, right?
You got it.
Okay, just give me a second here and see if I can get the... this had a big reversal. You bought it yesterday?
Yeah.
Well, that's the thing to do, my friend. It's beauty. It's had a heck of a run.
Yeah, it looked like it had completed the pattern down
here. It's up more than 20%. Boy, it's terrible connection. I'm sorry, folks. I don't know if you can hear it or not, but that's a tremendous. You had that big ABCD pattern down there, and you also had a little 3-drive on the hourly down there around around 31, and it's trading at 37 now. That's a 20% move in one day. Oh, boy, that's a heck of a move. Is this oil-related stock?
Yes, it is, Larry.
Okay, good. Well, that's probably why it's doing so much, would be my guess. Anyway, I'd hold, because I really think oil is very closer to a bottom than anything else. Now, we've had a heck of a move in oil today. We've had $5 a barrel just since the middle of the night last night when we pulled down to that $54 a barrel level, and then we shot up to 59. So I still think we got a lot more to go to the upside. That $65 question or $64 question is whether we're going to pull back, one more time to that 786 that comes in at around 51. But, when you're talking at 53 and 51, that's pretty close on a long-term basis. So I would say that we're very, very close to a pretty significant tradable bottom in crude oil from alongside. That's what I'm looking at. Are you still there? Oh, I've lost connection again. Oh, good. I'm afraid that I'm losing connection. Why? I don't know if it's my fault or TFNN, but we'll blame it on them with anything else. Now, Brent, we've also been watching heating oil and natural gas also, and those also are telling us, and also the gasoline futures, they're also telling us that we're due for a really significant rally in these. So I've got my eye on those also. So it looks really interesting right now. Anyway, boy, I don't know whether I'm still on the air or not. This is.
I can hear you. I can hear you.
Okay, good.
Yeah.
Okay, we will.
A little broken up, but I can hear you for the most part.
Yeah, this is true. What I might do here is I'll see if I can close a few programs here and get going here with this. Let me close my my data feed here for a second, because what I wanted to do in the next part of the show is to take the folks around the world and look at some of these different stocks that I've been watching, stock markets that I've been watching. So is there anything else I can help you with, Brett?
No, it just looked like it completed a pattern down there at 30, and so far it's acting pretty well. So
20% in one day, yeah, I'd put in the category of acting pretty well.
All right, Larry, I'm glad you're feeling better, and just you have yourself a great day, okay?
Thanks a lot, Brent. We appreciate it. Happy holidays to you and your family.
Same to you. You take care.
You bet. Okay, folks, what I'm going to do now is I'm going to do a little bit of an international flavor here. Hopefully, oh dear, I really am hoping that I can find it. What did I do wrong here? Well, yeah, here's one. There as we go. I wanted to show to start out with the Canadian, the Canadian dollar, because I believe we're making a major top in the Canadian dollar here at this 116 level. We hit that 2 nights ago. We backed off about 100 pips since then, but that's really all we've done. We've completed a beautiful pattern in here. You can see that the pattern that we made last July, which is labeled number 1, was exactly the same as the one we had just recently. So that's telling us that we're very, very close to a turn down where the Canadian will start to gain against the U.S. dollar. So that's what it's looking like from that perspective. The next one, of course, that we've been keeping a really close eye on that has done very well for us has been the euro. And yesterday we went up and hit the exact number during the time that Premier Putin was giving us his spiel on interest rates. They got up to the 125 60 level. The 786 came in at 125.45, which was pretty much spot on, and it's dropped well over 100 pips. It's about 140 pips since that time, so it's telling us that that's another one that looks like we're getting ready to have a big reaction to the downside. Remember, the long-term pattern in the euro is extremely bearish. There's no other way that you can look at it than being extremely bearish. There's just no other way. It just has a bearish overtone to it, and there's not really much else that you can actually do but say that the euro is bearish against the dollar. There's no other way to look at it. Someone's asked a question about the price of palladium, and frankly, folks, I know very little about the price of palladium. All I know is that it follows the price of Apple, like what else to say? Rocky the Bullwinkle, Rocky the Bullwinkle. It's already broke 100 pips today, honey. It went up and touched the high again and then broke 100 pips. Yeah. Oh, boy, oh, boy. Okay, we're back. Okay, terrific. I'm sorry to lose these connections, folks, but I don't know, why it's happening. We've got a first-class connection here, but unfortunately it's not working the way I want it. Now, I would like to show you the price of the Canadian dollar that we were just talking about here, because on a long-term, we hit that 61 retracement yesterday, and we matched it again today. That came in at 116. We just went down to the 115 level today. That's 100 pips so far today, so we have a little bit of a reaction going on there that is quite substantial, so we have to keep in mind that that's what we're looking at. I'm not sure where the move is going to end, but that has a really strong possibility because we have lower highs going back over the last few years, and that's really what we're looking at. Someone asked me a question about what the Fed is going to do today, and frankly, I don't know. I mean, you listen to the news, which I don't listen to, you'll find that you'll have 5 or 6 different people giving you 5 or 6 different answers, and all I'm doing is watching price action, folks. Yesterday, we came down to a perfect 61% retracement on the New York Stock Exchange Index. It was a Bradley stock market date that came in on either the 15th or 16th. It was also Sarah's birthday, so how could anybody be short on Sarah's birthday? And the markets had a pretty good rally. But remember, we had a 50-point rally in the S&P, and it went right back down again. So, you remember what Thomas Jefferson said, any government that's capable of giving you anything is capable of taking everything away from you, and that's what these markets can do. So you've got to be very, very nimble here. The structure of the market, I believe, has changed. The way we came down from these highs on December the 1st was much, much worse than July and September, about twice as bad. The other thing is it was a divergence because the New York Stock Exchange Index made its 3rd major divergence, July, September, December. Boys and girls, it's never done that before. That's not a good thing. This is not a very good thing to have happen when you're looking at something like this. So keep in mind that when things like this happen, they're not necessarily good. I've had a request here to take a look at the price of Oracle. I'll be more than happy to do that. My good friend Larry Ellison has a home in Tucson. It's the largest home in the new part of Tucson. There's some Rockefeller and Firestone and Mellon mansions that are bigger, that are way out into and where Paul McCartney lives are much bigger. But the Ellison place is not too far from me. He's up the hill where the rich people live, but it's really a fabulous place. It's over 20,000 square foot. He's never spent a night there, from what they've told us. I'm not. I personally don't know this, but that's what everyone. in the area has told us, so we'll see what happens. Let me get this chart up, and we'll take a look at it. Oh, I put the wrong symbol in. Just a minute. Hold on just a second here. I have to do it again. It's ORCL, not OCR. Give me a second here. Boy, we sure missed the warm weather from Tucson, folks. Even though it's been lovely here on the East Coast, it's hard to get acclimated to it when you're used to 70-degree weather all the time. During the winter, that's what really makes it nice. Okay, let's see if we can get this. Oh, dear. Did it again. I must be dyslexic because every time I put these things in, I put the wrong symbol in. It's OCRL, Oracle. Let me get this. I really, Basil can put these things up, and it's this might do it. Okay, hold on one sec. And then we'll see where we are. Oh, I must not be able to get this chart for some reason. I put it in 3 times. It's ORCL, Oracle. Oh, give me a second. Well, this is it. There we go. We should be all right now. Oh, it's not coming up yet. So, there we go. Just give me 1 second here. This stock has been a stronger than market stock recently. We made a double top up in here. It's still, I don't think Oracle's going to do very much. We bottomed really good on the 15th of October, or 20th for Oracle, and we almost doubled it. Well, we went from 35 to 42. That's a 1.618 expansion of this stock. So it's certainly a much more bullish stock than the rest of the market. This last pullback that we had was a 382, so as long as you stay above 39 in Oracle, it looks like it's certainly in an uptrend. That doesn't look any other way to call it other than to see what see what you're looking at. Someone's asked me a question: how far does Larry Ellison's house actually is from my house? It's about 4 miles, about 1 mile up the mountain and about 3 miles west. So it's quite a ways, about a 20-minute drive through the mountain road and stuff. But it's a big house. Let me tell you, it is huge. It's about 20,000 square foot, I believe, is what they said. And he had it for sale for a couple of years, then he took it off the market. And as near as I've heard lately, it just sits there and no one even uses it at all. So it's an interesting phenomenon. We had a question about Tesla, and I'm going to bring the chart of Tesla in. Now, Tesla has been, I think I put that chart up already, didn't I? Yes, Tesla's already had a reversal day to the upside, and people say it's a play on oil stocks. And folks, I don't believe that at all. I mean, the person that buys a $100,000 car is not concerned about a 20, 30, 40, or 50 cent price and the cost of gas or anything like that. So I really don't believe that has anything to do with anything at all. That's just the way I'm looking at it. So I could be wrong, but that's what I'm viewing it as. Something like this, and we'll see what really happens. But I don't think Tesla has anything to do with the price of oil. I know if you correlate the price of oil over the price of Tesla over this past 3 or 4 months, it's correct because Tesla's been going down and crude oil has been going down. But if you do it over the last 6 or 7 months, crude oil's been coming down since July, and Tesla hasn't been going down since July. So that's an interesting play, but I don't think it has anything to do with the price of crude oil. Tomorrow on our show with Rich Anderson, we're going to be discussing the price of cattle because they have, after we made that triple top up there, the 3 drive to a top pattern up at the 172, we've now broken better than 15 cents. In cattle, they've broken down quite a bit, and we'll be certainly watching, both natural gas, crude oil, and heating oil tomorrow on the show, along with the price of wheat and corn and soybeans too, because we've got a crop report coming in very shortly, and that will also give us some information on, what we're looking at with some of these markets that we have here running. But that'll be on tomorrow's show. For the commodity market. Also going to cover sugar and cocoa, which is, I hardly ever do that, but I've got some interesting charts on that. Okay, we're going to take a little break here, and then we'll come back and wind up the show.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Darrell Martin here on TFNN.
Okay, we're back, folks, and we've got a caller from New Jersey. Dan, are you there?
I am. Thanks, Larry.
What can I do for you, my friend?
Well, I had a question. If you just had, let's just say you wanted to put a couple $100 on a long shot option, $500, and with no stops, let's say.
Yeah, you want to just buy an option and you're going to risk the whole premium.
Yeah, out to maybe April.
Mm-hmm. I don't think you have to go that far. I think March is fine.
Now, granted, I don't know. I know you're short weakness, but with everything as extended as it is, I know the IBV is really extended. I mean, what indice or, if ETF, I mean, what would you see would be the best bang for the buck on a longer-term put option?
A longer-term put option, I would pick the IWM, get a put option in the Russell market because it didn't make new highs, where the Nasdaq did and the S&P and the Dow Jones did, but the Russell did not. And we're in the midst of this little rally here, but it should have a pretty good bounce here. Over the next year, and that I would just, if you're going to do $500, just find something in March. In fact, you could either pick. That's December. I think it's going to happen quickly, so you might even look at a January. They expire the third week in January, so that'll save you 2 months of a premium because that's what kills you is the time decay in that. So pick a January that's selling for around $500, and it's just like if you went to the racetrack, you bet 100 win, 100 a place, and baseball and exacta with it. And if you're right, you're going to make a lot of money. And if you're wrong, you lose your $500. So I think it's much better than a coin toss, and the rate of returns could be very high.
All right. Now, would you think that we're going to see any real movement next week?
That's not a bad thing to do, in my opinion.
Okay. Now, would you think that we're going to see any real movement next week, or is this all going to be maybe the first, second week of January?
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.